Most people learn economics through numbers, charts, and theories written over the last 300 years. But long before economics became a field with textbooks and equations, there were thinkers trying to understand something much more fundamental. How money changes people and how people change money. Nearly 1,000 years ago, in a world filled with trade, scholarship, and rapid growth, a scholar named Al-Ghazali began exploring these questions with a depth that surprises modern readers. Today, we study inflation, incentives, markets, liquidity. He studied something else, the human patterns behind all of it, and that's what makes his ideas feel so modern. To understand his contribution, imagine the world he lived in. Around the 11th century, major cities across the Middle East were becoming global hubs of commerce and knowledge. Caravans connected continents. Markets were full of goods from faraway lands. Scholars debated everything from mathematics to medicine. Wealth was rising, opportunities were expanding, and societies were changing quickly. Economic growth often creates excitement, but it also creates uncertainty. People try new forms of trade. Markets develop faster than rules. Wealth brings advantages, but also pressures. And this is the world Al-Ghazali observed up close. Instead of focusing on transactions or laws, he focused on questions that cut deeper. What gives money meaning? How does wealth reshape behavior? What keeps an economy stable? What makes it fragile? These might sound like modern economic questions, but he approached them with a clarity that still resonates. For Al-Ghazali, money began with a simple purpose: to make exchange easier. He described money as something that helps people cooperate, a neutral tool that only gains power when people collectively agree to use it. In that sense, he saw money not as physical metal, but as a kind of shared understanding. This insight matters even more today, when most of our money is digital numbers on a screen. Its value comes from trust, not substance. He also believed that money works best when it circulates smoothly, when people earn, spend, invest, and exchange in a way that supports the broader community. When circulation slows, opportunities shrink. We study this today through concepts like liquidity, spending cycles, and velocity of money. But he was noticing the same pattern centuries earlier. Ghazali also paid close attention to the environment where trade happens. He observed that markets function effectively when information is clear and participants understand what they're exchanging. When information becomes uneven, when some people know much more than others, the system becomes unpredictable. Today, we call that information imbalance or market friction. He simply called it a barrier to healthy exchange. What makes his work remarkably modern is his focus on incentives. He explored how people make economic decisions based on expectations, fear, confidence, and opportunity, the same behavioral principles economists study today. He understood that if incentives encourage productive activity, a society becomes stronger. But if incentives drift toward unproductive habits, the entire economic rhythm slows down. His writing about currency stability is also surprisingly forward-looking. Medieval coins were made of gold and silver, and their quality could vary over time. He noted that when people became unsure about the consistency of their coins, they changed their financial behavior, saving more, spending less, or turning to alternatives. This wasn't a criticism. It was an observation about how confidence shapes economic life. Today, economists would call this trust in monetary policy. But centuries before those terms existed, Al-Ghazali was studying the same dynamic. He also believed that work played a central role in the stability of any society. Not because work was morally superior, but because productive activity creates a foundation that supports exchange, innovation, and community life. In modern terms, he connected economic contribution with long-term sustainability, an idea still discussed today in debates about productivity, labor markets, and social resilience. What makes Al-Ghazali's perspective so rich is how he blended practical observation with an understanding of human behavior. He recognized that people don't always act in purely logical ways. They respond to incentives, expectations, and emotions. They adapt to opportunities. They adjust to uncertainty. And these adjustments, multiplied across a population, shape the economic landscape. In today's world of financial cycles, technological disruption, global markets, and rapid growth, the core question he explored still echoes. How does society maintain stability when economic change accelerates? Al-Ghazali didn't write formulas or economic laws. Instead, he identified patterns that appear in many societies across time. When people have confidence in their institutions, in their currency, and in each other, economies tend to flourish. When that confidence weakens, economic decisions become cautious, and the flow of opportunity slows. Modern economists call this market sentiment. He simply called it human behavior. The most fascinating part of his legacy is not that he predicted anything, but that he understood something timeless. Money is not separate from society, it is woven into it. Economic systems succeed not just because of trade, supply, or demand, but because people believe the systems will continue to function. When that belief holds, progress is possible. When it weakens, uncertainty takes its place. Looking at our world today with digital currencies, global trade, fast-moving markets, shifting incentives, and financial debates, his ideas feel less like ancient philosophy and more like a lens for understanding modern change. What Al-Ghazali offers is not doctrine, but perspective, a reminder that behind every currency, every market, every transaction, there are human decisions shaping how societies grow, and those decisions governed by confidence, cooperation, and clarity determine whether economic life becomes sustainable or unstable. Understanding thinkers like him isn't about studying the past. It's about recognizing patterns that continue to influence the present. If this opened a new way of seeing the relationship between money and society, subscribe, because history has a way of making today's world much easier to understand.